Assalamualaikum and hello everyone. Welcome back to my third video on the preparation of a consolidated statement of financial position using question September 2014 edited version of FAR300. And we're going to look at the next stage, which is we have already done our consolidation journal entries with the workings, and we're now going to focus on how to prepare the workings for goodwill, and then prepare the computation of group reserve and non-controlling interests. Right? Remember earlier we have done all the consolidation journal. So let's look at what we have done earlier. So these are the things that we have done much earlier. Preparing the consolidation adjustment for all information that is relevant. And what I have done as well is that I provide some little notes here for you to recap of what you have read, maybe from your reading, from the knowledge of MFRS 10, and also from the textbook that you used. Okay, so now is to prepare the to go to the next stage, which is to calculate goodwill. So if you would recall, when you calculate goodwill, it should be done for not just ordinary shares. Okay, not just for ordinary shares, but also it should be done for the debentures, because in our case, we also acquire debentures. So if you can see here, the 5% preference shares were not acquired. Debentures were acquired 30%, and the share capital, the control or the controlling interest is 75%. So we'll do the calculation of goodwill. So here, this 1.5 million here, this one comes from the figure here. This, in case you wonder where is it from, this 1.5 million, this one. Okay, 1.5 million. Let me just take a highlighter for you, so that easy for me to point out. Okay, right. So this is the amount, the one that you will take, and you are going to include here. You're going to include here, and I will also be using the same blue there. Okay, so that was the consideration transferred. Next, don't mix up the one for the debentures together. Next is to find out the net asset, or the fair value of net asset on the date of acquisition. Fair value of net asset. And this is, in short, FINA. Right. So to do that, you will be you'll be doing this, taking the fair value of net asset information on the date of acquisition. So the first thing that you will do is you will take the retained profit balance. However, the retained profit balance that you have here is a negative figure. So since it is a negative figure, is a loss. So remember, when we were doing adjustment number 1 and 2, it involved deficit, and that deficit is being debited to the retained profit. So therefore, it will actually reduce if it's a retained profit. But here, if it's a loss that you have somewhere on the date of acquisition, which is 100,000 debit balance, so it means that now the loss will be even more. So 130,000, and this is a retained loss after adding the deficit on the date of acquisition for this adjustment number 2. Apart from that, when we were doing earlier our bonus issue, that also affect the fair value of net asset, and we have done the adjustment here. Let me just show you. Where is it? This one, info 8. Yep. So when we debit the general reserve, what we debit is the general reserve balance on the date of acquisition, right? And that has to be adjusted in the general reserve of Shiny on the date of acquisition. And we decide to use this because of the general reserve balance is more than enough to cover up the bonus issue. So the share capital would have increased by also 150,000 because the ratio or the it is issued in proportion of 1 for every 10 shares. So you need to go and adjust in the fair value of net asset. 1 is under general reserve. You need to go and reduce the general reserve with the bonus issue since this is from pre-acquisition. And you also need to go and increase your share capital because your share capital now has increased from 1.5 million and it is increased by 150,000. So this adjustment will affect the two parts in your fair value of net asset, which is here. Okay. So share capital bonus issue will now make your share capital to be 1650. This must be done first in case you have the bonus issue. And this is from information number. Let me just check for you. This is from information number 8. So I put here info 8, right? Info 8, which is the same as what you have earlier for general reserve. So this general reserve has been decreased. Earlier on, it was 270,000. Which general reserve? We are talking about the general reserve on the date of acquisition. This one, which is on 1st of July, year 2. 1st of July, year 2. This is the general reserve that we are using. Right. Therefore, what you would notice is that now the general reserve has reduced to 120 due to the bonus issue. The share capital has increased. Of course, the impact is 0, but somehow the shareholding now becomes more to the parent. With that, you will have your, not a bargain purchase, this is a goodwill. And this is the goodwill of 270,000. Because the non-controlling interest, if you refer to information 10, you are informed that it is measured based on the fair value of net asset. Fair value of net asset on the date of acquisition. So you need to settle the fair value of net asset calculation first, then find out how much is the non-controlling interest. You got 410. You total up this two figure. This figure you should total up with the one that you transfer for your investment in ordinary shares. And if you do that, you get 1910 deducted with the fair value of net asset. You have the goodwill. Now we calculate the goodwill for debentures. For the debenture, the consideration transferred was how much? Go and check. It is 120. So this is 120 here. Okay, this is 120. And this 120 should be also the same thing here. 120. Right. So that will then be compared with the debentures that you have acquired. So the one that you have acquired is given here. That is the cost. You need to know the amount that you acquired. It is here, which is in your information here. So it is exactly the same. You acquire 120,000 and you pay the cost of investment also 120,000. Because of that, that will not give you any goodwill or bargain purchase. For the cumulative preference shares, even if you have the preference shares in the subsidiary, that is not acquired because all 200,000 belongs to the non-controlling interest. So you are done with the calculation of goodwill and you will get 270,000. And this goodwill is being impaired. If you look at what adjustment that we have done earlier here, right, you will see that the last adjustment was about the consolidation reissue of goodwill. So this goodwill that was being impaired is the total goodwill of 270,000, right? 270,000, the goodwill, times the percentage impact 30%. So this one is the impairment of goodwill. That impairment of goodwill will be debited to the group retained profit, which is Rainbow, 81,000. So that will have to be adjusted later. We'll see that later. Okay, now you have the impairment loss of 81. Make sure you put that in your the schedule for computation of group reserve and NCI. And the goodwill that was unimpaired is 189, and that goodwill that was unimpaired will be shown here, where it will be shown as your item here as the goodwill. So goodwill on consolidation will be shown here. That was from the schedule. So that is what you show here from the schedule. So just take a different color. Okay, this is from the schedule 189, but this 81 will have to be reflected. Now we are preparing the schedule for computation of group reserve. We're trying to find out the total. So what you should do first is find out the non-controlling interest. This non-controlling interest is the non-controlling interest here. Non-controlling interest here, I am using a blue color here, right? And this non-controlling interest. The same non-controlling interest will be here. So just transfer that here, or you can put it side by side. The next one is a non-controlling interest for the shares that you do not acquire. So for the shares that you do not acquire, that was the preference shares, all 200,000 belongs to the non-controlling interest or non-controlling shareholder. So therefore, this figure, which is the non-controlling interest, comes from the 100,000% times 200,000 to 200,000. So the column that you need to include here will depend on what are the reserve that you have. So as I mentioned earlier, the reserve that you have is general reserve, retained profit. So it should be one for general reserve of subsidiary, one for parent or the group, retained profit for the subsidiary, retained profit for the group, and another one will be for the non-controlling interest. So this is what I've done here. The next stage is to put the balance of the reserve that you have as per the current financial year end. So go and take that from your question. How? You can go to the general reserve. Let me just show you a better view here. So the general reserve of the holding company, for example, 1030 will be included under general reserve of Rainbow or the group general reserve. This one. Okay. Next is this general reserve here, 1030, 650 should have been here, 650. This one is bonus issue, so you do not need to put color there, no field for bonus issue, right? Next is the retained profit. Retained profit, you have the figure here. This is for the subsidiary, for the parent, and this is for the subsidiary. So this is the group retained profit beginning the balance before adjustment. general reserve, the balance before adjustment. So you can put here, the group retained profit is 750,000. The retained profit of the subsidiary Shini is 380,000. Where you get it here. Now you can do the rest of the adjustment, posting what you have done in your consolidation journal. So I'm now showing information 8. So you can go and refer to your information 8 that you have done earlier, where bonus issue 150,000. So remember the journal entry where you have the information here, information number 8. Information number 8 is here, right? Okay, you will have to go and adjust in the fair value of net asset under general reserve. This is the last adjustment that you put for your bonus issue. So make sure you put in the correct column. So it should be adjusted here. So now after the bonus issue, the figure is 500,000 because you reduce the general reserve. The pre-acquisition balance is 120. 120 refer to this 120, which is the general reserve balance after you have already deducted with the, I put this color here, this color with the bonus issue. So this is the amount, the same thing. Okay, the one that you have the working here, put it here. Then that is the pre-acquisition balance. For the retained profit, the pre-acquisition balance is here. Okay, pre-acquisition balance. Take the one from the working here. Okay, now you have your retained profit of Shiny, the balance before you do the adjustment. What you need to do now is to post to the column in this schedule the adjustment that affect retained profit of Shini. So you can go and check and you will see that from our workings, information 2 is regarding the fair value adjustment. Deficit are being debited to the retained profit. So this one, check. I would put red for things that I have already checked. Checked and checked. So deficit. And then at the same time, that deficit, we have earlier adjusted the over provision of depreciation. So these are the journal that we have done much earlier, if you can see here. These are the things that we have earlier done. So information 2 is actually here. So information 2, which is on over provision, right? Over provision that you debit and credit. So what? When you credit retained profit, you need to add. When you also debit retained profit here, you need to go and deduct. So this is why you have the figure there. The depreciation was 10,008. Then you have all the information that were already done. So you need to transfer one. Information number 7, for example, is on unrealized profit. Unrealized profit. So where you go and transfer that by debiting the retained profit 32. Information number 7. Information number 7, we have to check. It's unrealized profit that is under the parent. Why under parent? As parent is the seller. So that was information 7 that is related to unrealized profit. On intra-group sale of inventory. So that was information number 3 actually. So we have to make some correction there. You don't have to cross-refer that. I'm just showing you to make things simpler. So that has been checked as well. and that also need to be adjusted with the depreciation. So unrealized profit and surplus or deficit will also need to be adjusted to the figure, as well as the depreciation adjustment. So these are the depreciation adjustment that we have made earlier. Okay, so that is the depreciation being over provided, that you have already calculated that here. Where is it? All right, that is for the unrealized profit on plant and machinery. Let's look at where is the unrealized profit on plant and machinery. There was information 6 on plant and machinery. Information 3 is on the inventory. Let me just check it, correct this. Information 3 on inventory, and information that relates to the plant and machinery is information 6. Okay, this is information 6. Right. Okay, 6 as well. This one is information 3. So do that together. You can see that URP, unrealized profit, and depreciation is being adjusted in the seller's retained profit. You can check the working here yourself later. Now is debenture interest payable. So this is from information 5, where we have earlier analyzed that there are some information 4 actually. Information 4 is on dividends. Information number 7 is on debenture interest from subsidiary. Information number 7. Okay. Debenture interest payable by subsidiary was 32. Look at number 7. 32. And this is the one that are shared by the parent, 9,600. And this 9,600 must be shown in the parent's retained profit. So here, to the subsidiary, it is an expense, but to the parent company, to the group, that is an income. So debenture interest payable is an expense. Debenture interest from means this is debenture interest income receivable. I put here received. Or you can put here debenture interest, that's fine. Debenture interest income. Right. From the subsidiary, 9,006. Done. And you need to also show the difference between 32 and 9,006, where in your consolidated statement of financial position under liability. This one is on inventory, where information number on information on inventory is information number 3. So this is the one, 10,000. So reduced under the subsidiary, because subsidiary Shini is the seller. And the last one we have already decided, this is information related to goodwill being impact. Done all this. Right. Okay. Now we will concentrate on the item here. So make sure that you've posted all the adjustment that you have done in your simple journal there, and post it to this column, the correct column. Whatever underwritten profit of the subsidiary, adjust in the subsidiaries column. Whatever that you debit or credit to the retained profit of the group or the parent company, adjust it here. What you debit is what you add, what you minus, what you credit is what you add. As simple as that. Anything that reduce the profit is what you also reduce the schedule. Anything that increase the profit is what you also increasing the schedule. So now you have this figure 9,070,400 as a result of also having the share of another item here, which is you have the share of the profits. Share of the profit that is by the parent in the subsidiary. So this 336,600 is actually 448,800. 448,800 should be 800 here. Okay, 448,800 times 75%. Times 75%. Let me put a note here. And this is from here actually. Okay. We put it here. So it's easy for you to refer. Right? So it is 448,800. That is the one that you have adjusted for all the, this is post acquisition, so adjusted balance. Adjusted balance after all the intercompany transaction whatsoever. Okay, now this is 448,800, and the remaining will go to the non-controlling interest column. This is the one that you take from 448,800, and you can check the formula here. 75% from cell M48. Right. The next one is, we are done with the general reserve of Shini already earlier on. Remember, we have done this part. So the general reserve of Rainbow, which is the group general reserve, we have already put the figure. Now we need to know that this is also the share of reserve that belongs to the parent, which is 380,000 times 75%. And this 95,000 is 380,000 minus 285. That goes to the non-controlling interest column. So you are done with the calculation for the your retained profit column of the subsidiary, group retained profit or retained profit of Rainbow, general reserve, and your non-controlling interest. This is the column. I will put this color here, blue, that you will have to transfer to your statement of financial position. This one as well, and this one too. Okay, this need to be transferred to the statement of financial position for the group. So just give you a view of that. So this is the whole view of the computation of general reserve, and the next one is to proceed with our consolidated statement of financial position. Okay, so you can see here the non-current asset, land and building, there are no adjustments. You just need to combine the result of the subsidiary with the result of the parent, right? Then put the date, Rainbow Berhad's group, or you can put here consolidated statement of financial position of Rainbow and its subsidiary Shini. But here it is the group name Rainbow Berhad. So the land and building, let me just show you. So this is from here. Just add them, no adjustment whatsoever. Just add them up. Okay. Right. We just need to do a little, yeah. Next is the plant and machinery, 940 plus 700. This 30,000 is the surplus. This 10,800 is the sorry, 30,000 is the deficit, 10,008 is the over provision, and this 6,000 is the unrealized profit on the intercompany sale. You reduce them, and this 1.2 or 1,200 is the depreciation adjustment, which are the over provision. So this first two item is the combination, the last four is the adjustment for elimination, referring to information 1 and 2. Motor vehicle, no adjustment, just add them. Goodwill, you have already mentioned, you have to put the goodwill, which are the unimpaired goodwill, this goodwill here from the working that you have done. Next is the current asset itself. So you have to add up the current asset. So you have to keep putting, you do not need to put investment in shiny because these are eliminated. It's a big no, do not include this. So this one you won't include. So I'm going to put a cross for you so that you won't put that. Okay. So therefore, this one won't be included. Right, so this one would be included, it will be included, this will be included by adding them and adjusting for the intercompany transaction. This. Ordinary dividend receivable, if the one that you receive from other than the subsidiary company, this must be included, but here it will not be included as these are all intercompany transaction. Remember, those are intercompany transactions, so this will not be recorded. Bank balance, you just leave add the bank balance. You can see here the bank balance, just add them. Bill receivable, we deduct with the inventories, we deduct with the unrealized profit 5501240, right? The trade receivable, we add them and then we deduct with the intercompany receivable balance, the unpaid amount from an information number. I have to put this is inventory is information number 3. You need to check that, information number 3, inventory. And trade receivable, that is also information number 3. Okay. And bill receivable is information number 5. So go and adjust that. And there are no other adjustment for bank. So the one that you adjust is the intercompany transaction. Remember this? Information number 5 is for the bills payable. We adjust them. And then information number 3 is for the unsold inventories as well as unpaid intercompany balance, information number 3. Bank, no adjustment. Ordinary shares, we will just put the one of holding only. I put here H only or parent only. Right, and then the general reserve, group retained profit, these are all from the schedule that we earlier prepared. Remember the color, the things that I've done earlier here. This one, right? So you have this figure from here, this from here, and this is from here, right? Ordinary shares will not report the one of the subsidiary because that has been acquired. The debenture, you will just add the debenture of the parent, 500, and you will just take the portion of the one acquired by the parent. So that will be eliminated, but this is the unacquired portion by the parent, which means this belongs to other debenture holder. Remember, parent only acquired 120,000. So the remaining figure out of 400,000, 280 belongs to other debenture holder. Trade payable adjustment should be made for information number 3, which is on intercompany balances that was unpaid. Bills payable, that was information number 5 that we have already adjusted for the undiscounted balance, right? And preference dividend payable. Okay, preference dividend payable, this is the one that is related to information number 4, where in number 4, none of the preference dividend were being mentioned here, but you need to understand because the preference shares were not acquired, so all the preference dividend here, here 60, this 60,000, this will all belong to the non-controlling interest. So that's why you have preference dividend payable to the non-controlling interest. Ordinary dividend payable by holding is given here 400. So you will include here 400. Ordinary dividend payable to the non-controlling interest, this 75 is as a result of taking 300,000 here, 300,000, this 300,000 minus 225,000, the intercompany dividend. So you will have 75,000. Debenture interest payable by H, this is information that are given in number 7. So you have to check that information again, perhaps it's here. That we have already done that adjustment much earlier. Okay, so this is the one of the parent. This will be shown in the consolidated statement of financial position, but the one of the subsidiary, you will take 32,000 and you will deduct, you will take this 32,000 credit and you will minus with the 9,600, which is the intra-group debenture interest. So you will just report 32,000 minus 9,600 for the subsidiary. Okay. Right. Now you have your debenture interest payable to by the parent 40, by the subsidiary to outsiders 22,400. Done with the whole statement. Right, you can check your statement here. So this is the view from the beginning. Okay, this is the view. You want to have a look, perhaps. These are the final answer for that. It should be having a total of 9185 and 9185. Now cross-refer all the information. Make sure that you do that correctly, but you don't have to put this. This is just to cross-refer. Okay, with that, I thank you for watching.